Hello and welcome to Pro Trader Strategies Market Commentary for June 16th. It's a Tuesday. My name's Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic indicators, the geopolitical environment, and how that impacts the overall markets with my market analysis. And I do the same thing in these daily market commentaries, but I'm layering on top of it these different option strategies I find to implement into our portfolio. And I really drill down on the nuances of those option strategies, because that is really where the precipice comes from in increasing our probabilities of success in that portfolio and with that strategy. We build them out so that we can be a little bit, maybe even directionally wrong and still make money. It is possible. Yes, believe it or not, it is. And when you watch the webinars, I really drilled down on the aspects of why, when, and where we're putting those types of strategies on. All right. But remember, I'm not here to give investment advice, and past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get on with this with economic data. Believe it or not, we got really good economic data. We'll talk about that a little bit here. Across the pond, nothing really to see, but here in the United States, we got core retail sales. Remember, that's going to strip out automobiles at the retail level. That came in at 12.4%, expected to be 5.5%, and they revised last month's number up as well from -17 to -15. Now, we've been talking about this number, core retail sales stripping out autos. Let's just talk about the adding in autos. It did just about as well, coming in at 17.7, expected to be a positive 7.9. Also a revision to last month's number, better. Now, these retail sales number, think about it. We have been sitting at home in isolation, and people are buying online. So we're seeing a lot of these stores also open up and have lines. So people have money to spend, even if they were unemployed. Some people that got unemployed were making more money on unemployment than they were when they were employed. So they have extra money to spend. That creates that velocity of money that we've been talking about, and that's what really spurs the overall economy. If we remember back to 2009, 2010, you know, the things we were doing by like trying to get everybody to buy a car really stifled that velocity of money. What this government, or what we're doing right now, is creating velocity money. Everybody's spending their money differently, and that's what's making this economy actually do rather well, despite the fact that we have this massive unemployment going on. All right, so let's talk about industrial production. This number goes back to like 1919, so it is one of the major ones to look at. It came in at 1.4%, which was a little bit lower than expected, but it was better than the economic data point we saw last month, which was the worst number ever recorded in industrial production history. As a matter of fact, it made it even worse with the revision. It was -11.2, and they revised it down to 12.5. So again, still historical miss on that part. We didn't quite get up to where we were expecting, but I think that retail sales number is really going to trump this industrial production number in the overall markets. Pressure to the upside. I don't think that industrial production is going to wane on that much. Capacity utilization coming in at 64.8, expected to be 66.8, so both those lower than expected. One thing to note with National Association of Home Builders Index, coming in at 58. Anything above 50 there is expansion. Anything below 50 is contraction. It was actually supposed to be at 43. Nothing revised the last month's number, which came in below 50 at 37. So got above that 50. As a matter of fact, home building here in Arizona is starting to pick up. As a matter of fact, somebody dropped off a letter at my house wanting to buy it. So when you start seeing things like that, that means there's very limited supply out there. So I can see why the National Association of Home Builders are a little bit optimistic, at least in my area. I think that there is a national shortage of homes. one of those things is we've seen home prices increase dramatically, so that kind of creates that as well. All right, business inventories came in at a drawdown of 1.3%, expected to be a drawdown of 0.8%. Better revision as well, and that's not really surprising when we saw these retail sales numbers just knocking it out of the park today, that we're going to see business inventories drop off as well. All right. Also, right now, at least last I checked, Powell was speaking and testifying. To me, he's not really saying a whole lot. Hopefully he doesn't throw a wet blanket on anything. Something to note with the Fed, though, they've been buying ETFs and stuff like that, bond ETFs for corporate structures. Well, they've decided they're going in and buying companies, individual companies' bonds. So that, to me, I don't like to see. That supports the market, that supports those companies. But at the end of the day, that's what free market price discovery is about, is allowing us as the consumer to go in there and do that. And when the Fed comes in and supports that, it kind of, rigs the game a little bit, to be quite honest. So they're going to be supporting prices and these different companies through those bond purchases. So companies that would normally probably need to fail are not going to, and the stock prices are not going to get down to a level of value where the consumer can come in and really scoop up and take advantage of that. So that being said, we saw a massive rally on that just alone yesterday. Today we're getting a continuation based on a lot of good news. We've got these core retail sales numbers coming out that were much better than expected. There's also a new drug that's coming out. It's a steroid that was normally used for maybe asthma patients, or if you were on asthma or having an asthma attack. Really, it's a steroid, and for cancer patients, and it's dexamethasone, I think is how you pronounce that. Anyway, that seems to reduce some of the swelling. Not necessarily going to help you with your lungs, but because of the inflammation around the body, this is actually helping patients that are on the ventilators. So these are the ones that are in dire need of something, and this seems to be, at least right now, the front runner of any of the other drugs. Remdesivir is off the table right now, but this dexamethasone is a drug that's basically a generic drug. I think at this point, since it's been around since the 20s at least, that there's probably no patents left on this, so just about anybody could start producing this drug. So it's a very low-cost drug, as a matter of fact, as well. All right. Anyway, crude oil starting to get a little bit of a move higher after, last couple of days we've settled below the 9-day moving average, which is signaling short-term bearishness. I do expect to see this start to roll back over a little bit. More and more oil companies are saying they're going to start pursuing alternative fuels because they don't expect to see crude oil get back up into the 50s anytime soon. So they're ramping up R&D on that type of things as well, or that type of energy, and that probably is going to cause a little bit more weakness in the crude oil there. Gold moving higher by about $8, helping me out a little bit after yesterday come back. Remember, I put on that long call spread, so I'm rooting for gold to go up and test the 261 Fibonacci extension. That would be a nice little move for me. I don't think it's going to go a whole lot further than that, but with the Fed continuing to print money and another $2 trillion in possible stimulus checks, that is going to probably weaken the dollar and cause gold to move a little bit higher, which is what I'm playing that for. Bonds are off by about 1.5 points. Didn't get quite back up into the area that I thought we were going to see. I thought we would start to see this push a little bit higher, especially after Powell saying that he doesn't expect interest rates to move higher for at least a couple more years. I think that the bonds are a little bit overdone to the downside. Now, again, I haven't played that to the upside yet, but it is looking like something that I want to add to my portfolio to the upside moving forward here. All right, VIX is slightly higher. We could call it unchanged, despite the fact that we're seeing the equities really move higher. Still have on my 30-minute chart from the Dow Jones Industrial Average. You can see overnight inventory got very long, and this is what we're talking about. Yesterday's just bull rally off of those lows was based mostly on the corporate bonds that are going to be bought by the Fed, and I think that they're starting that almost immediately. So that gave them some upside move. Overnight inventory got very long. Coming into today, I thought we were going to, this is actually the move right here on the retail sales number. So we opened up basically on the highs of the day. I have seen some weakness throughout the day, as Jerome Powell's speaking, but I don't think that he's saying, I was watching, he's not saying anything that is really causing this weakness. I think it's more some longs starting to cover here late from the overnight inventory there. So we are seeing a move higher here. Some of the charts aren't looking so great though, as a chart set up, earlier when we saw that sell-off before this last 30 minutes or so. It could look like we're getting a bit of a dead cat bounce, which means you get a bounce and then start maybe seeing a sell-off here going forward with some of these charts, because we're seeing a lower high there. All right, Nasdaq is up 115 points. Despite the fact of what I just said, we did yesterday settle above that 9-day moving average, short-term bullishness after being below that on Friday. So today, a settlement above that could give us a little bit of lift, but I would have to say if we settle, very close to that 9-day moving average, or anywhere close to, let's say, 98.33, 98.33 settlement in and around there or below is going to make that look like we are getting a little bit overdone to the upside. E-mini S&Ps, same situation. We could look at it as the 50-day Fib, or the 50% Fibonacci on mine, which is a little bit outdated, but I like it because these Fibonacci's line up very nicely with some of the other points of control and things of that nature. As a matter of fact, I heard somebody talking about 3,000 lining up with one of their Fibonacci's and the 200-day moving average. So that was going to be the line that the bulls and bears kind of fought over. And we could see it bounce back and forth above and below that 3,000 mark. And I was just thinking, it's the magnet, it's the point of control. You are looking at the market profile here, and that is really what is going to be what we see there happening in and around that 3,000. That's where the most time and volume has been spent. So you heard me talking about it. It's going to look like it's acting as support. I just said this yesterday, support and resistance, and it's popping back above and below that. But really what's happening is we're just bouncing, pinging around that point of control where the most time and volume has been spent. So I thought that was kind of funny. Here we have the E-mini S&P breakdown. It looks very similar to what we saw over there in the Dow, right? Overnight inventory very long coming into today. We got the economic data points on the retail sales, which still are blowing me away. And then it looks like the longs got handed to it as coming into the day. It took that opportunity to really short the market. Now we're getting a bounce back right into the middle of today's value area. So E-mini S&P's up about 35 on the day. Another thing that I heard was that the government was going to start spending more money on infrastructure. And usually what that means is building, right? So if they're going to be building, what are they going to be using to do some of that building? Well, Caterpillar and Deere. But I went with Caterpillar because they are usually more of the heavy construction, and Deere is more along the lines of logging and agriculture. So I went with Caterpillar on this to play it to the upside. Its implied volatility percent, don't get me wrong, is about 38 when I put this on, which is a little bit lower than what my overall mandate is. That is 50, right? But I do believe that we have this spike in there that I have to take into consideration on this. We've seen a spike in volatility here. We start getting a move higher, lockstep back to the point of control. I think we'll see that volatility come out, and that will help me dramatically by selling an option strategy, which is what I'm looking to do, right? So on our roadmap, we're looking at this. I have a bullish to market neutral assumption with Caterpillar. If they're building infrastructure, that's going to help out, or if the government is going to be doing infrastructure building, that's going to help out Caterpillar. That's bullish, right? So Caterpillar fits my rule for trading options. And even if I'm neutral with this, you know, a long call spread, I get neutral, it's going to hurt me. Well, with this strategy, it goes up to the point of control or trades sideways. As long as we get that volatility coming out, I will be more than happy to have that type of situation on. So that's where my thought process comes with this, right? So in that, I want the volatility to come out. I want to play this to the upside. What am I leaning towards? Well, if premiums are really elevated and I expect those premiums to come out with that volatility, then I'm looking to sell strategies. And because I have a bullish assumption, I'm looking to sell some puts in there. That's right. So I went into the July, which is about 35-ish days to expiration, and sold the 105 puts in there for $1.18. All right. Looking to get out for 50% of my max profit. We start seeing this volatility come out, I should surely see that. And if the volatility comes out and we just kind of trickle along sideways, maybe even slightly down, then I'll still be okay with this strategy. All right, that's all I got for you guys. That's the only thing I've done. I haven't taken anything else off. We talked about MasterCard yesterday, and it looks like I might get MasterCard taken away again. It's back above 300. That's where I'm short the 300 calls. So above that point of control after today's pop in the markets there. So MasterCard doing well by that. Also, we also saw EA Sports make a new all-time historical high here again. So doing very well with that. I'm going to hold on to them at least for right now. I think that they're still seeing kids spend right now, right? We're at summertime and these kids are going full boat on that. All right, so that's all I've got so far. Check me out on Twitter at Wolfman's blog. Also, one last thing we got to go over. Keep in mind, we are an educational company. Please take a moment to go over this disclaimer. There is risk of losing financial, or there is financial risk. You could lose money. So please take a moment to go over this so you know what you're getting yourself into. All right, so that's all I got for you. Other than if you can't take that, take it easy.